Stacking physical silver and gold is trusting in what endures. And much of what we see today is not going to endure. Hey everyone, thank you so much for watching Yankee Stacking. You know, people largely judge a portfolio or judge a person's investment decisions on the basis of the success of a stock price. But is that really what's most important? The price of an equity position, the price of Bitcoin or some other cryptocurrency maybe, even the spot price of gold and silver as measured by the paper price of these commodities? I don't think so. For years, I invested heavily in the stock and bond markets. I even traded more than I invested sometimes, I admit it. I think it was a youthful YOLO mindset on what ETFs or individual stocks I should buy. I tried to be careful. I tried to look at factors that would help me make good investment decisions, but not always. And those were moves that I made back in the 80s and 90s, right up to and right through the bursting of the infamous dot-com bubble. But in 2008, that all changed for me. My mindset was altered. I was fortunate at that time, blessed really, to front-run the bulk of the financial crisis by shifting first from stocks to bonds and then quickly from bonds to what amounted to distressed real estate. I did it through private mortgage lending. But it was a stressful time, and it was a sea change in many ways for me. I think another sea change is coming, far greater than what we experienced back in 2008. Let me backtrack just for a second. The crisis of 2001, that dot-com bubble bursting, and the monetary reaction by then Fed Chairman Alan Greenspan really started, I think, the endgame. This only sped up during the global financial crisis when Fed Chairman Bernacki made infamous moves that some claim to have saved the economy. Actually, it didn't. It stuck another knife in it. And also the claim by our then President George Bush when he said, I still can't believe this, that we had to save the free markets by destroying free market principles. So crazy. But the next Fed chair and current Treasury Secretary, Janet Yellen, was no better. She confidently claimed that we were experiencing something that was a once-in-a-lifetime event. Never fear. Everything is just fine. Fed chairman after Fed chairman, Congress after Congress, president after president on both sides of the aisle continued the fiscal and monetary insanity with more and more monetized spending. And that fiscal and monetary madness has only accelerated. We now have another woke Keynesian Federal Reserve Chairman in Jerome Powell, and nothing has changed except it's gotten a lot worse. Inflation is raging. It's threatening to be persistent. All the signs from even highly bogus statistics like the CPI are blinking bright red. People are living paycheck to paycheck at rates never before seen in my lifetime. People are leaving the workforce in droves. And we continue to see the Fed artificially suppress interest rates and keep printing currency. And don't you think for a minute that the much trumpeted tapering and minuscule rate bumps that are coming is going to work. It's not. I've said this many times. Central banks are trapped. And here are the choices. Destroy our intrinsically worthless fiat currency, or destroy what's left of our consumption-based, debt-driven, stock market-obsessed fake economy. It's like a financial Sophie's choice, an excruciatingly difficult choice between two disasters. And there's no way to avoid the choice now. The horrible results of establishing a central bank in the first place, closing the gold window, thank you, Nixon, debasing our currency, printing trillions of dollars, Adopting modern monetary theory and all the rest is going to end in ruin, no matter how much they build and bolster our economic house of cards.
Our aversion to risk, obviously it applies across the board. It applies to finance. We outsource nearly all policy to the Federal Reserve at this point. We have a cadre of experts who are supposed to decide how much your dollar is worth and also keep down unemployment. All these experts fail. And that failure makes us angry because we have been lied to. We've been told we can hand over everything to the experts and they will push a magic button and they will fix everything. But they're lying to us. And we can build dams against the risk. And the waters can pile up behind those dams. And then eventually, they will blow right through the dam. And when that risk materializes, it'll be a lot bigger and a lot worse than the tiny risks that we have been avoiding all the way along this process. When that dam bursts, it destroys civilizations. Small risks can be channeled. Small risks can be withstood. When you build up entire bulwarks and edifices of holding back risk, and then the risk materializes, it swamps everything. It's a huge civilizational mistake.
That's the result right there. And right now, more than ever in my lifetime, I see people chasing after a ticker symbol, momentum stocks, gambling with crypto, and judging one's wealth by a monthly financial statement. Yes, diversification is still a smart idea. Don't put all your eggs in one financial basket. But don't hide behind the diversification word as an excuse to chase the investment crowd, to listen to the financial pundits on cable news or even on YouTube in a reckless way. I don't know, maybe it's my age. Maybe it's decades of slowly and painfully gaining wisdom from those far more financially wise than me. I don't know. But I think the idea of endurance and durability may matter as much, if not more, than the price of a stock. And this idea of endurance and durability really germinated in my investment mindset by listening to an interview with a wise investment sage, Anthony Dedden. Listen to how Mr. Dedden puts it in this Real Vision interview, which I'll link in the description of this video.
In America, there's something extraordinary that takes place, and that is we in America, and I say we, are quite keen to like what is faster and what is bigger and what is better. So often growth for the sake of growth overwhelms our motivation and our actions. But what if these measurements were wrong? What if really what mattered is something other than bigger and better? What really mattered was not that, but the idea of endurance. I began thinking of those who have survived the test of time. Again, as a way of a textbook, thinking of those ingredients that have allowed them to adapt to changes, survive wars, inflations, etc. I decided that I would own gold, the physical metal, for different reasons. I would own it, so I sold equities and I bought shares in GLD, which I subsequently sold because shares in GLD, for me, did not represent ownership in gold. They represented a security that perhaps reflected its price. I wanted to own the real thing. Same way a farmer down here doesn't own cattle futures. He owns the real cattle.
Yes, counts, yeah, right.
Today, it represents gold about 35% of our capital, physical metal.
Yeah.
And I think any good investment operation, particularly if it involves irreplaceable capital, must have embedded in it a source of continuity and substance and reserves. So I decided that I want my liquidity not to be somebody else's liability. I want it to be an asset.
No, okay, that's
gold gives me what? Scarcity.
Yep.
It gives me permanence.
Yep.
And it gives me independence from the financial system.
Yep.
It gives me all those things.
All the things you're looking
for. These
for.
three things.
Endurance, durability, gold, silver. Do you look to assets that have proven their worth over time? Over years or decades, maybe even centuries? That's where gold and silver come in. And that is why I stack in these particularly perilous times. And I think you should too. Well, I hope you enjoyed this video. Hit the like button if you wouldn't mind. And as always, I hope your day is A-OK.